Alright, so when I trade, I always try to trade with the trend. So in order to establish the trend, you can go out to these time frames, monthly time frame, weekly time frame, daily, 4 hour, 1 hour, and so on. Further down you get, meaning that in a shorter time frame you will have more noise, and we're going to get to that in a little bit. But noise means that your trades are less successful because you have volatility, and you manage to get in on the wrong end most of the times on that. But that's also where you'll be scalping if you do 1 minute scalp or 5 minute scalp. So, but first you need to establish the trend, and so you do that by drawing trend lines. And I use the rule of you could draw a trend line from all the way up here, which would serve little purpose today unless you use fork, which I don't want to use today. So we had a break from a previous high over here. We broke its previous high and almost set a new trend, and then it started going back down again. So I use that as my area for a trend line. When you have a downtrend, also referred to as a bear trend, you put your trend line on the top of the candles. These are candles. You should have 3 points. 1, 2, 3. Usually the best. The price action, this is goes up, comes down, goes up, touches the trend line, goes down, goes up again, touches the trend line. And I can sit here and wait for it to come back up here and then take another short trade. But that'll take a couple of days maybe. It's 170 pips, so I want to get in sooner. But first you want to establish the trend, because you want to trade with the trend. So we now know it's a downtrend. So as a beginner, you should only take short trades, meaning trades going down, not long trades. Trades going long are the blue ones. Short trades are the red ones here. So we're going to start working our way down to find an entry that works a little bit better. This is the main trend line, and we see that it's come back here and touched it, come back and touch it, didn't make it up here, and the reason for that is that the trend gets stronger. This is, you can draw a fork, and it shows the trend being stronger, and once it breaks the fork, the trend is starting to slow down, and then it's time to get out, start thinking about a different move. Anyway, at this level, when you start trading as a beginner, Jane, you need to be trading on either D1 daily or 4 hour or 1 hour, because you're going to get less damage, meaning it's easier to get in on good trades as long as you don't take too big of a trade. So what you need to do is you need to start establishing trend support and resistance. So start at right from your current price and look left. So if I put a line here, try to see if there's any previous support here. I don't see anything on 4 hour time frame, so I can switch up and see if it's been down here before, and it hasn't been here in all of 2014, so I can go to weekly, and we see right over here that this is a pretty good support line. It's come down, hit it, bounced off, went back up, broke through it, and once the price action comes from below the line, it's called resistance. So it's like a ceiling, that's your resistance. When it comes from the top, it's like the floor, it's the support. So right now this price is working against your support. It's broken through before, so if we want to bet money on this, we can try to look at past behavior. And you can do that just by drawing a box. This is a little bit more than beginners, but you can try to see what happened in the past. And twice in the past, even though it goes all the way back to 2010, the price broke through and got down 500 pips at the worst. Around 2010, everyone was losing their wallet. In 2012, market stabilized a little bit, so the drop was only 414 pips. So there's a slight chance that this will break through and then drop another 400 pips. So you can join the train and then put your stop loss. If you trade on weekly, your stop loss would be above previous high, right around there. That's a big gap. Stop loss is 466 pips. So you need to make at least 466 pips, which, measuring this, just about. This is an enormous stop loss, just so you know, but if you set this trade, you'll stay there for a week or two, at least. But this gives you the basic. So we want to get back into setting support and resistance. Let me just clean it up. So start it right, look to your left. So we now know this is a good support. So if you trade on 4 hours, you want to make sure that it breaks through this support. And once it breaks through, it's going to test it probably again. And you'll see that on shorter time frames. So right here, you don't want to take the trade right now on 4 hours because it's bouncing off. So the chance is that it can go from here and that way up and shoot off. So right now that's not a good entry. All make sense so far? Okay, good. Alright. So let's switch down from 4 hours to 1 hour and start looking at how we get into this trade. We want to find that trade. And I cleaned up the support. We have a touch point here. We have another touch here. So it's a pretty good support. Chances are right now not so good that it's going to break through. But if it breaks through 1 hour, we can make 46 pips. This is a consolidation area. It sits here and builds, and then it takes off. It breaks out and takes off. So at best, you're going to make another 46 pips. Let's find out if we can get into this trade. If it now bounces up, we want to see where the next stop is. So we try to find where he bounced previously. Remember, now we're drawing the line above the current price. That means it's going to hit resistance here. And it's also a strong area. It's been here before. So why there? Well, you're trying to find out, let me zoom in, you're trying to find a point where the price came down and bounced off. And you could either use the wicks, you know, these long tails here, as your support resistance, or you can use the candle close or open to identify where the price comes down and doesn't break through and bounces up. And comes, let me turn this off, comes down and bounces off again. Yeah, Beta has the Peter's suggestion is to use the deepest wick. And you can, if you look here, yeah, the variance. So what you look here is where the price went up. He went up here, and it didn't break through. And then it came down here. He went up here, didn't break through, bounced down a little bit to support, and then broke through, right? So right here, what this candle is, these two candles, if we just put a line there, let's see if that has a resistance or support. And you see right there, it's a natural support resistance level right here. Gives you a good indication what could happen around here, right? Price is rejecting or bouncing off of these lines. So when it comes from underneath, it's resistance. When it comes from the top, it's support. So you see these levels here. Price can't really get through, and it bounces up, and then it comes a big breakthrough. Same here. Just sits here and then goes up, and then breaks through. And this kind of gives you the entry of breakthrough techniques. When you look, when do you enter? Well, I usually wait for a candle to break through, and then I take a trade. Let's see what you said. So candle, little breakthrough do not count as a breakthrough. Well, I usually look for a confirmation candle. So if I have a breakthrough, like I have here, then I wait for a confirmation candle. This would be a confirmation candle. Could I go short here? Yeah, but I would burn up here, right? Some people would take this trade right as that closes, and you would take the right down here 40 pips. It's all about how you enter. You gotta figure out what's a good entry, but I usually use confirmation candles for entry. If this opens up, same color, meaning down, and I take the trade. And my stop loss is usually about 40 pips. So let's say I started here, what close at that, 40 pips, right there. I would have been probably taken out on this trade, because it's right around here. I would have been taken out on that. So you gotta kind of figure out what's a good entry for you. But usually, one thing that I haven't showed yet is I use boxes to trade. So I use breakout techniques. So if I clean up, it'll be easier to do this. So with the support and resistance, when I look at a chart, I usually try to identify big wicks, and I draw a box. Sorry, got a frog in my throat. And I use these to trade as long as they're not bigger than 20 pips. And this one is now 47 pips, so I gotta get down to 15 whereas I usually trade. Big wicks, 20 pips. Right there. So I would have been sitting here waiting for it to go out. I would have actually entered on this candle right here. Right there. And my stop loss would have been 10 pips above this box, which would have been right here. So I would have been short here. I would have swing up in the box to retest this. This is a support resistance right here. Tested the resistance, and then I had a huge drop. I would have been in the trade for here to here. I exit when I see long wicks. That means exhaustion. So I would have taken 88 pips roughly. So this is a breakout strategy that I use. Right now, I would not enter this trade. I would sit here and wait until I have a move outside this trade, outside this box. But it all works when you look at this box and you move it around to areas where you have big wicks. You can use the bottom of the wicks if you want to, but usually you want to kind of try to connect it to something. We had a breakthrough here, and then we had a candle that went right back in the box and then broke out this way. And this, because my box is 20 pips, put it there, right there to that candle. That was the end of that run. So my first breakout was here, this blue candle. The second candle didn't confirm the breakout. He went back into the box. The next breakout, same thing. Breakout, not a confirmation candle, so I wouldn't have taken that trade. Here's the next breakout. Don't have a confirmation candle, but I didn't return into the box, so I would have entered at the close of this candle here. Right here. And I would have exit. I would have exit on this pin bar right there. I use, so right up here you have your tools, you have your line of resistance. So if you don't have the rectangular, you right click, customize, and then you would have seen it in, whoops, you would have seen it in here, rectangle, insert. So you got the rectangle there. On 15 minutes your box should not be higher than 20 pips. So long wicks for me means that there's some exhaustion going on here. They're trying to push down, but they can't give the strength. So the strength is shown by the shape of the candle. So this tried to break through, but it couldn't. There's a lot of indecision here. This is another area where you could have put the box. Right here. Breakthrough, confirmation candle. You would have entered at close of that right here. 10 pips. And we probably would have gotten hammered here because we would have gone 10 pips below this. Well, we would have been saved by the grace of God. 10 pips is there. So we would have entered here, gone up 10 pips, then we'd gone down, almost hit SL, and then we would have been up here. Make sense? Same thing is going on over here right now. We can actually yeah, so what Peter was saying is that they stop loss hunt, which is when they stop loss hunt, basically they know that you try to go in, let's say here, right here, you go long on the close of that candle, for instance. You see all these wicks going down. They try to chase your, sometimes they try to chase your stop loss. That's why you see big wicks. But someone that might have gone short here because you got an engulfing candle or bearish trend down here. You see this huge spike here. Anyone that was going short here would have had the stop loss somewhere around here. It would have all been wiped out by this little move here. But again, do your support and resistance. Start from where you're at. Right here. I'm going to try to find an entry right now. We're probably going to end up on 1 minute. and I want to take a trade. So right now I'm trying to find a spot where I think there's, so if it goes up, I feel that it will go up somewhere around here. This seems like a area of resistance, support. If it breaks through that support, the next stop is that's a little hesitation there. So, and these are all going to make more sense once we go down to a lower time frame. I think the next move will be down to here. When it does break out from this area here, which we now know is a consolidation area, a lot of nothing, a lot of nothing, a lot of nothing, and then it'll break out, up or down, right? So let's go in for 5 minutes. See a lot of noise here, comes down here, goes back into the box. Don't see a good trade set up right now. Let's hit 1 minute. And we have to draw some more support and resistance. Start where we at. That's a good support resistance. It hit it several times. It went up. Couldn't really penetrate, so we could take a short position, sure. A few pips here. Let's see if we can make some money on that one. The other reason why I take this trade is because we have a peak here, peak here, peak here, peak here, means lower, high, lower, high, lower, high, lower, high, indicating you'll continue with a lower high. So we're going to wait and see if that does. If it does, it will come down to here, roughly, and then it'll start thinking about what to do from there. But this would be just 3 pips, or 30 bucks if you take it, minus the spread, which is 0.8 right now. Alright, so any questions? All crystal clear, huh? So Jane, what part is missing for you? I agree. Go ahead and ask. You have a one-on-one almost here, so. Okay, so when exactly to get in? Alright, so let's. Oh, no worries, Jane. So let's take another chart while this one develops. Let's take a TPP USD. First establish the trend. We can see this is a downtrend, right? We'll switch down on 1 hour. So we have a downtrend. We now know we have a downtrend. If you would have come in here, Jane, right here, when it hit, this become, now remember the price action comes from below. It hits this trend line, which is acting as a resistance. Remember, it's coming from below, hitting the ceiling, can't break through. When it can't break through, you could have entered anywhere once it start moving away from it, down. You could have gone short. Somewhere around here. You moved away from the trend line, so you saw the price bounce and get away. And once it starts getting away, you can go short. Does that make sense? Okay. The other thing you want to make sure is that when you're sitting here, let's say you trade on 1 hour time frame and you're coming in right around here. You want to be careful that you don't jump in somewhere where it's kind of fighting a support. Say this would be support right here. This is a support. So if you're coming in right here and the price is sitting bouncing on this line, don't take the trade until it breaks through. Then take the trade. Once it breaks through, what usually happens is it goes down a little bit, comes up and tests the resistance, and then continue down. And it's when it tests the resistance, what usually happens is it goes into the trend line, and then from there it will go down. So, oh, for Pete's sake, Pete happens to be here. So that's usually what happens. That's the move you see. It goes up to the trend line and bounces off. So that would be a good entry. Now, let's get back to this. We know we have a downtrend. So let's zoom in. And let's figure out if we can clean up this downtrend line a little bit. And we can. We still know it's a downtrend. Can you cheat like this? Of course you can. You had a feverish attempt to break through that trend line. Didn't work. You came back in. Bounced on the trend line. Went down. Came back up. Bounced on that trend line. Now sitting hovering around here. When it's sitting here, you want to find out if it's fighting a support. So just draw a line and then start looking to your left. Is this a natural area of resistance or support? In this case, support. And it is. Right here. Right here. So this is not a good entry right now on 15 minutes. We can go down and see what happens. Came down, bounced off, went up, came down, sitting here trying to figure out if it's going to break through or not. We're at 5 minutes right now. We can wait for the breakthrough and then go short. We have a hanging man here, so trend continuation. Go down to 1 minute and see what's going on. Right here, this indicates that they're building up volume and it's going to get ready to take off somewhere. Chances are that it's going to go up and then down. Hanging man is it's a candle that looks like a man hanging from a rope. Best description I'm going to show you. And everyone has their own interpretation of what each candle means, but let's see if we have a hanging man here somewhere. Here's this little candle here. It's a hanging man. Here's his head, here's his legs. He's been hung. Life from there on goes down in the toilet. Inverted hammer right here. But all of these are things that I don't really want to tell you right now because it might confuse the things. This could be a hanging man. People would call it doji or some shooting star or something. What you have to learn is to just look at the candles and learn what these candle means. I call these indecision candles, but it's also because it's part of a bigger area right here. It's building volume and it's going to get ready to break out. Yeah, exactly like Peter says. Forget the funky names for now. Just focus on this technique. So right now we can sit here. We're on 1 minute. So let's see what trade we're going to take. Okay, we have a breakout. And we're going to get ready to take a trade, depending on what happens here. Right? We're still fighting this support, so we're trying to figure out what's going on. And by the way, that Euro USD is now up 11 bucks. Let's switch over and you can see what that means in pips. That's 1.1 pips. So this, again, we're back to the box. If you want to try to be true to yourself, you should do the box to the top of the wick. And we'll just wait and see what happens. This is a peak. If this peak is lower, chances are it's going to shoot down. But right now it looks like, what it looks like to me is that it's going to take off up for a little while. Sitting here building volume, so we could take a trade and just guess, but that would be a bad guess at this point. If we do this, we have one peak here, and we have one peak here, so they're too close to each other to even take a trade to figure out what we're going to do. So this is the part where you put your hands under your bum and sit on them, and I mean that literally, because right now it would be tempting to take a trade, and that would be a mistake. Now this candle here could end up being, here comes a funky name, pin bar, but it's not. Okay, so we look like we're breaking up. Definitely building volume, you're right. Willing to break through one way or the other. Exactly, Jane. It's building up and it's getting ready to break out. Now breakout from here and up would be 10 pips. Remember, we're trading on 1 minute. So this candle now closes outside the box. We wait for a confirmation candle and then we take the trade. So any other questions, Jane? As Peter says, your patient often gets tested. And he sure does, because it is boring as boring can be to sit here and wait to take a trade. And this is what gets a lot of people. They will take that trade just to take the trade. And they will second guess themselves all day long. And then they lose their ass. So we're going to try to not take that trade. So Jane, when you start looking at trend lines, start from D1. Establish what the major trend looks like. The major trend right now, you see, it's a major trend. This is a major downtrend, right? A bear trend, right? So now you know that. You start working your way down. It's still a downtrend. And in order for the trend to change, it has to break previous high. So this thing here would have to break this thing here in order for the trend to actually have changed. And it hasn't. What ended up happening on 4-hour time charts is it hit resistance, indecision, 2 indecision candles meant it's going to continue down, which it did. And as you keep working your way down, remember that you're working in a downtrend, right? So your best trade's going to be short trades, meaning down trades, right? Because you take the long trades, they're more risky when you're a beginner. because you're trading against the trend. You want to trade with the trend, and the trend is down. We established that here. It's down, right? So keep working your way down. When you start trading, trade between D1 and H1. Yep, that's what trade with the trend means. Trade with the trend means just if it's a downtrend and you're a beginner, only take short trades. If it's an uptrend, only take long trades. That way you will avoid getting burned. Right? See, we're still sitting here waiting for something to happen. It's absolutely boring. And see what happened? The thing went up to the top of the box. It's going to come down, testing it again. So now it's tested that area here. We now know that's support and resistance right there. If it doesn't go beyond this box, and this is scalping, what we're looking to do right now is scalping because we're trading on 1 minute. So this is as much noise as you can get on the channel, because you see these moves. When I have 1.4 pip in spread, I can make 9 pips here if it breaks out up. 9 pips minus 1.6 in spread. So I'll make 7 pips, roughly. But if I put 10 lots in there, that's $700. And that could be just one candle to take me and gives me 700 bucks. This candle here, 7 pips minus the spread, 10 lots, 500 bucks. But you should not trade on this time frame. Do not go lower than 1 hour when you're starting out. It's going to be tempting. You can go down here and try to figure out if you're fighting against the support and resistance, but you can see it on 1 hour as well as you can see it on 15 minutes. So there's no point or no reason for you to go down to this 15 minutes in the beginning. Stay on 1 hour, draw your support and resistance. When it goes up to support, wait for it to try it 3 times, then take the opposite trade. So right here, it hit this resistance 3 times. On the 3rd time, go short. Make sense? Look at this. Down there, bounced off support. Now it's going to test the resistance again. That'll be a 2nd trial. It won't be a 3rd because on the 3rd move it'll break out. So, yeah, Euro USD is absolute. I'm telling you, Peter, the market today is absolute crap. It's so boring. I mean, just dreadful. I had another lesson today and I sat here and it was just yeah, the market's just crap today. I don't know. I was playing with binary options today just because I was bored out of my skull, so I was doing 60-second trades. If boring, could I scalp for small quick gains? You certainly could, Jane. But if you're a beginner, you're going to take 10 scalping trades, 9 of them going to be a loss and 1 going to be a win. And guess which one comes first? You're going to get your win first, and you're going to be all excited, and then you're going to scalp like a madman. And 9 out of those trades following that first win, it's going to be losses. Start by trading. But you can try. You have a technique here that very few people have, and it's this box that you see. that I'm showing you right now. You can try it. Yeah, the more money you have, the better you are for scalping. But you have a technique that I've shown you here, which is the box. Go back to Euro GBP. You see up, down. This is the second trial. If it bounces off this one, it actually broke. What happened here on Euro GBP, it broke that counter trend line that I set. So I could be fantastic, insane right now and take a short trade. But if I do, this is scalping, I would put my stop loss up here. So that's for shits and giggles, take the trade, because it broke this counter trend line. So now we're scalping. I just want a few pips. If it's gonna go anywhere, it's gonna go down here and bounce back up. So how many pips can we get? 3.6 minus 1.5 in spread, we get 1.5 pip. That's going to cover your peanuts for later on. But that's really it. It's pretty simple. You got to be patient, like Peter said. And that is the hardest thing ever. So when I say sit on your hands, I literally mean sit on your hands. When the price action is inside of this box, sit on your hands until you see a breakout. You see there was a breakout here, no confirmation candle. Breakout, no confirmation. Breakout, no confirmation. Broke counter trend line, tested it, going down now. That's why I took a short here. But this counter trend line might be confusing. I don't know. Ask me if you think it's confusing and I'll show you. This major trend line here shows you the major trend, which is down. So can take 4 days, weeks. Can you change to extend and take longer? No. Yeah, so I mean, initially what you want to do is you want to take, when you start trading, you want to take long trades. Let's hop on over to USD yen. And be careful with the yen. It's a shitty currency to trade. What is the trend? D1 says it's an uptrend. Weekly says an uptrend. And monthly shows you it's an uptrend. Now I happen to know something about Elliott waves that I'm not going to involve here, but I know we are kind of starting a third leg. So, but we know it's an uptrend. We're happy with that. So, up, testing it. Up, testing it. Up, breakthrough. That's how it's going to go. So here's the major trend line. So you see it has no value to you on H4, so delete it. Draw a new trend line on the time frame that you like to trade on. So how good is this one? Not very good, unless you want to use a fork. So let's go from here to here. So this is just a guidance for you right now. Start working your way down on your time frame. Now you're down to an hour. And what you see here is went up, came down, went up, came down, went up, stayed away, come down, gone up again. Now start looking at the price, where the price is. Pull a line and see what it tells you. Is this an area of resistance? Well, that would be more like it. So if this 1 hour candle, which closes in 5 minutes and 30 seconds, if it closes above this, resistance, go long. The least amount of pips you're going to make on this trade is 42 pips. I'm saying 42 pips because I see a line here, right there. So if this one closes, you go in here somewhere. 33 pips. Make sense? Now, if I draw a counter trend line from this, let's say you came in right on this candle here, these two candles. A counter trend line would look something like this. Right there. That's a counter trend line. Remember, the main trend line is up. This is a counter trend line. You're waiting for it to break through. So again, if this candle closes above this counter trend line in 4 minutes, go long. Does that help? Great. Yeah. So that's Forex basic. Start drawing your support and resistance. Find them. Identify them. Learn how to spot them from a mile away. And you know where your entries are going to be. Once you've done this for a little while, you'll be able to just take a naked chart like this and really fast establish first your trend and then starting doing your support and resistance. And remember, work from now to the past. So now is there. Start from your right, look left. Is this an area of support or resistance? Yes, it is. Okay, so wait for it to break through and then take the trend. Take the trade. Easy. Right, Peter? You good, Jacko? Jane, it's very easy. The hard part, like Peter and I keep saying, is patience. It is extremely hard because trading on Forex or DAX is addictive. It is worse than crack cocaine mixed together. So once you start doing this, it's really, really hard. It's really hard to stay away. And it's really hard not to take the trade because you just want to take that trade. My pleasure. If there's no other questions. Yeah, you're right, Jane. I'm starting to hate the weekends because I can't trade. So it's really hard if you can't trade. But you use the weekends to study your chart. So yes, of course you can watch the video. I'm gonna stop the video right now.